As of right now, Saturday, January 24, 2026, the market is closed for the weekend, but we saw some telling activity during the final trading session of the week. Strive Inc., trading under the ticker symbol ASST on the NASDAQ, wrapped up Friday, January 23, at a closing price of 0.8705. This represents a very slight uptick of about 0.05% for the day. While that might look like a flat line on a surface-level chart, the intraday movement was actually quite a ride, swinging between a low of 0.8356 and a high of 0.8950. Most people looking at that price see a penny stock struggling to keep its head above water, but the reality is that the underlying mechanics of this business just went through a massive structural shift that the broader market hasn't fully digested yet. While the retail crowd is watching the cent-by-cent movements, the institutional players are looking at the fact that Strive just completed its acquisition of Semler Scientific. This isn't just a corporate merger, it's a total pivot. By bringing Semler into the fold, Strive has effectively transformed itself into one of the largest public holders of Bitcoin in the world, sitting on a treasury of over 12,700 BTC. Expectations for ASST have been pinned to its identity as an anti-woke asset manager, a niche player in a crowded field of giants. The market thinks this is a small-cap firm fighting for scraps of AUM, but the reality I'm seeing is a company aggressively rebuilding itself as a dual threat, a traditional fee-generating asset manager paired with a high-beta Bitcoin treasury. This creates a massive disconnect. If you're looking at Strive as just another firm offering Fidelity ETFs or competing with the Fidelity trading platform, you're missing the forest for the trees. This is now a proxy for digital asset volatility, backed by a real operating business. The recent trading volume tells a story of intense transition. On Friday alone, we saw over 76 million shares change hands. Compare that to the average daily volume of roughly 120 million, and you realize the liquidity here is staggering for a company with a market cap just over $1 billion. We've seen a heavy amount of institutional shuffling this month, especially following the news of a $150 million follow-on offering of preferred stock. Typically, an offering like that would send a stock into a death spiral due to dilution fears. Indeed, we saw the stock drop after the announcement on Wednesday. But look at the recovery on Friday. The stock stabilized. That suggests the smart money is stepping in to provide a floor, viewing the capital raise not as a sign of weakness, but as a war chest for further Bitcoin accumulation or strategic expansion. If you are using platforms like Robinhood Stock Trading or the SoFi trading platform, you've likely noticed ASST popping up on the most active lists recently. This isn't just retail hype. We are seeing a tug-of-war between short sellers who think the Bitcoin pivot is a desperate move and long-term accumulators who see a path to a much higher valuation. The expectation is that Strive will continue to bleed cash as it builds out its infrastructure. The reality, however, is that their AUM has already crossed the $2.3 billion mark across their 13 ETFs and direct indexing products. They aren't just a concept company anymore. They are a functioning asset manager with a massive speculative kicker in the form of their Bitcoin holdings. Institutional activity has been fascinating to track. We saw CEO Matthew Ryan pick up 500,000 shares personally earlier this month at prices above where we are trading now. When the person at the top puts nearly $500,000 of their own capital into the stock during a period of high volatility, it should make every self-investing enthusiast stop and take notice. Most people looking for investment help on social media are being told to stick to the Magnificent Seven or standard NVIDIA stock plays, but the real opportunity often lies in these mispriced hybrids where the market doesn't know which bucket to put the company in. Is it a software company? Is it a Bitcoin fund? Is it a traditional wealth management firm? Right now, the market is pricing it as a confused mixture of all three, but as the integration with Semler Scientific settles, the narrative will likely shift toward it being a Bitcoin-first financial powerhouse. This is where the tension between expectation and reality gets interesting. Investors expect a slow, grinding growth in AUM like you might see with a typical Fidelity brokerage account. The reality could be a rapid re-rating if Bitcoin enters another bull cycle, because Strive's Bitcoin per share metric is designed to outpace the coin itself. Let's look at the broader landscape of online investing. Many traders are flocking to Robinhood stock trading or the SoFi trading platform looking for the next big thing. They often get caught up in the hype of Apple stock or the latest AI craze. While those are solid foundations, a portfolio that doesn't account for these structural shifts in the financial sector is a portfolio that's behind the curve. Strive is positioning itself to be the bridge between the old world of Vanguard-style indexing and the new world of decentralized finance. They are utilizing their direct indexing platform to give shareholders a voice in corporate governance, which is a massive differentiator from the silent ownership you get with many other investing sites. The risk profile here is obviously higher than your average individual brokerage holding. With an implied volatility in the triple digits, this isn't for the faint of heart. The put-call ratio has been leaning bullish lately, which tells us that the options market is betting on a breakout rather than a breakdown. If you are into self-investing, you know that following the flow of the options market can often reveal where the big move is coming from before it hits the headlines. We're seeing a lot of activity in the February and March contracts, suggesting traders are positioning for the next earnings report on February 24th. Comment below how many shares of ASST you currently hold, or if you're waiting for it to break back above the $1 psychological level before jumping in. I'm curious to see if the sentiment here matches the heavy buying we saw from the insiders this month. Now let's talk about the business model in more detail for those who are new to the Strive story. Founded in 2022 by Vivek Ramaswamy and Anson Frericks, the company initially gained traction by challenging the ESG, environmental, social, and governance mandates of the big three asset managers. They argued that companies should focus on excellence over politics. This resonated with a large segment of the investing public, allowing them to scale their AUM at a pace rarely seen in the RIA space. Today, they operate under Strive Enterprises and have expanded their reach significantly. The acquisition of Semler Scientific is the real kicker. Semler was already a known quantity in the Bitcoin space, and by merging, Strive has essentially reverse-engineered a way to become a massive Bitcoin treasury company while maintaining its fee-based revenue from ETFs. It's a brilliant move from a capital structure perspective. They are using the stable, predictable income from their wealth management business to support the high-growth, high-risk profile of their digital asset holdings. This is a far cry from the simplified robo-advisor models you might see with something like a SoFi robo-advisor or Schwab Intelligent Portfolios. This is active, aggressive management. In the short term, the macroeconomic pressures are real. We are seeing a general rotation out of riskier small caps as interest rate uncertainty persists. However, Strive's pivot to Bitcoin provides a unique hedge. If the dollar weakens or geopolitical tensions rise, their BTC holdings become a massive asset that could decouple the stock from the broader NASDAQ malaise. Most investors expect ASST to move in lockstep with the Russell 2000. The reality is that it's becoming more correlated with the digital gold narrative. As we look toward the future, the catalysts are clear. First, the full integration of Semler's assets and the potential for more Bitcoin acquisitions. Second, the growth of their direct indexing and wealth management arms, which provide the fundamental floor for the valuation. Third, the potential for a short squeeze if the stock manages to reclaim the $1.50 level, which is the current census analyst price target. When you have this much volume and this much insider conviction, a price of 87 cents starts to look like a massive statistical anomaly compared to the 52-week high of over $13. In summary, the market is currently viewing Strive Inc. through an outdated lens. They see the struggles of a young asset manager and the dilution of a preferred stock offering. They see a price under $1 and think risk, but the reality is a company that has just transformed its balance sheet, secured a massive position in the world's most valuable digital asset, and has a leadership team that is literally buying the dip with their own money. The expectation is failure or stagnation. The reality is a high-stakes, high-reward pivot that is just beginning to bear fruit. Whether you're using SoFi Invest, Fidelity Wealth Management, or just checking your Robinhood app, this is a ticker that demands your attention, because the gap between what the market thinks it knows and what is actually happening on the balance sheet is widening.